All right. Let's see if this works. So welcome back, everybody. We are trying to get the chat back on the screen. Man, I don't know why it's not working. All right, let me try one more thing. But on the computer here, I see NMB045. Good to see you, NMB045. Good to see you, man. It says, happy Friday, Tom. T-5 to New York City. Hey, yeah, you're going to be in town. That's awesome, man. Glad that you're going to be in town, by the way. Thomas is here. Dutchman says, we're back. Vinny Castellano says, hello, everybody. Hope you have a great week. Good to see you, Vinny. Joe Hernandez says, hey, Tom. Felix says, hey, again. Daryl says, good evening from Chicago, Illinois. Buy the book. Says, welcome back. Hope you're well. Thank you so much. FredX is here. Welcome, Michelle K. Sally says, hi, Tom. Chris Beeman, the one and only, welcome. From Arizona. Dutchman is here. Dutchman is here. Yes. Carson says, hey, Tom. Everybody's like, can you see us? You know, for some reason I can't. Let me see. Alan Wilson says, good evening again. Good to see you. The British Grey. Welcome, British Grey. Kevin from Buffalo says, hey, Tom. Having a great time in the city. Hey, Kevin. Yes. So Kevin's joining us from Buffalo. He is actually in town. He is in town in New York. Hopefully you're having a great time. I believe you told me you went to Becco tonight, so hopefully that's correct. I'm trying to get the chat up on the screen here. For some reason the chat will not go on the screen. All right, I'm gonna try one more thing and then we're just gonna have to figure it out. And may have to go, I may have to stream without the chat tonight, but let's try one more thing. So anyway, guys, we are going to be talking about the FOMC meeting, what the Federal Reserve said, are they going to raise interest rates, but more importantly, starting June 1st, we have some clarity about reducing their nearly $9 trillion balance sheet. They will be declining or rolling off U.S. Treasuries. They will decline about $30 billion per month, up to $60 billion a month starting in September. Mortgage-backed securities will also roll off the balance sheet to the tune of $17.5 billion a month, all the way up to $35 billion a month in September. So we're going to talk about that. A lot of stuff. Obviously, we talk about Paul Tudor Jones, Stanley Druckenmiller saying we have to watch the Federal Reserve. The Fed is the end-all, be-all. But let me just try something here to get the chat on the screen. Oh, that's the wrong button. Well, here's my face for those of you who want to see it. Definitely wrong button. There we go. Chat, delete. Yeah, guys, I think we're just gonna have to roll without the chat. So we're gonna have to figure it out. I don't know. Let's see. I guess we'll continue on our walk, and I'll try to troubleshoot on the go. I won't keep you guys waiting too much. So I see NMB045, I see Thomas Dutchman is here, Vinny Castellano, Joe Hernandez, Felix Mr. Ming is here, Daryl by the book. Good to see everybody. Lupe is here, good to see you. DWG is here, welcome. Always a pleasure. Man, I don't know what's going on with my phone tonight, but we're all good now. Wendy England, good to see you. Chris Beeman, yes. So Chris, please send me, I was messaging you today. Please send me whatever you have to send me, and we will we'll try to figure something out for sure. I promise. Michelle's case says, "Hey Tom, how was your trip to Atlantic City?" So the trip was actually pretty good. I'm not a big fan of Atlantic City, to be totally honest with you. But it was good to connect with clients again, some different prospects. There was a lot of companies that I've been really trying to get in front of over the past year. So a lot of those companies were present at the event, which was really good. So just to get face time with new prospects and clients and customers, I think is a good thing overall. But not really a big fan of Atlantic City, not really a big fan of the gambling scene. I don't know, just my personal preference. But everybody, we are right outside of the Plaza Hotel here on West 58th Street. Hey, Arum Z is here. Says, Tom, how was that golf swing? Didn't really do too much golfing, but the golf swing definitely needs work, for sure, 100,000%. So looking forward to playing some golf when I get back to Miami, Florida. Some very good golf there. Teresa says, FaceTime Tom, I know. Teresa91 says, hello from Ireland, love Ireland. Thank you for joining. You know, one of our great moderators, he's no longer here. I think he watches the streams, but he no longer chats. The Swan is from Ireland. The ABX girl is here, says hello everybody. Good to see you, the ABX girl. Yeah, Chris Beeman, you were telling me you were at Kohl's for 20 years. That's a long, long time. Well, congratulations on your success there. I'm sure you're going to be on to bigger and better things. You know, I know we were just talking briefly about potential opportunities for remote work, like SDR, sales development, or business development opportunities. I think those could be a little bit lucrative. Janith Supremo, thank you so much. You're very kind. Joe Hernandez says, I missed the Swan. Joe, same here. So Joe, maybe offline I'll tell you a little bit of a story about the Swan, maybe. But I think he's still watching. I just don't think he chats in the chat for some reason. Samantha R, welcome. Good to see you. Yeah, Wendy England is not a big fan of gambling as well. Charlie Richardson says maybe it was a software bug in the chat. Well, for some reason, you know, my phone the past couple nights has been doing that. Usually 2 or 3 minutes into the stream, there'll be no chat, and then all the chats just come flooding in. So I'll try to troubleshoot that later. One of the things I've noticed about New York, almost every single street is being repaved, which is really, really good. We had the skateboard about 2 or 3 days ago. And right around 23rd Street, I would say all the way down to about 8th Street or West 8th Street near NYU, everything is pretty nice looking in terms of the roads being paved. So pretty ecstatic about that. Mohammed is here, says, hey Tom, good morning from Malaysia. Welcome Mohammed, always good to see you. Sanjib is here, says, hey Tom, how are you? From Montreal. Good to see you, Sanjib. Hopefully everything is well in Montreal, Canada. Beautiful night in New York City. We just finished a mini rainstorm here. It was raining about, I don't know, I'd say from 4:30 to maybe about 7. Almost reminded me of Florida. Usually when I'm down in Miami, we have these crazy rainstorms for like 1 or 2 hours and then it stops. But for everybody who's just joining the chat, we're gonna have a topic for tonight's stream. We obviously heard the FOMC, or we heard from the Federal Reserve this week on Wednesday. So they are going to continue to be steadfast in their attack plan to really, really crush inflation. So what does that mean? Well, I could tell you what they say. Whoa, what is this? Is this snow? Oh, it looks like it's soap. I think somebody put one of those bath beads in the fountain. It's so cool. So it seems like the Federal Reserve is going to be steadfast in raising interest rates at every single Fed meeting up until September. So here's what they said about September. There is a possibility that if we get inflation data that shows prices cooling off a little bit, there may be the possibility to cut back in September. So what does that mean? That means we're probably going to get, or 100%, we are going to get 50 basis point rate hikes across the board, at least until September, at least. And as we've seen this week, markets actually rallied off the back of that. Today, I think the S&P 500 closed up over 2%, but we still have to realize and understand the big picture, which is price action is still sitting well below the 50-day and 200-day moving average. And as we know, in bear markets, usually what tends to happen is the most aggressive rallies. The most aggressive rallies tend to happen in bear markets, so I would not be surprised to see price action on both the S&P 500, the Nasdaq, and the Dow at least rally back to the mean. So a mean reversion trade here to the 50-day, and then the possibility of rolling over, but we'll see. Don Smith is here. Good to see you, my friend Don. Says happy birthday. Thank you, Don Smith. Appreciate it. Mr. Ming says, oh man, I saw someone pour a bottle of dish soap liquid into a fountain at the mall once. They had the whole crew clean it up. Bagels and Walks is here. Good to see you. Chris Beeman says, hey Tom, how was your birthday? My birthday was good. I really didn't do much. I mean, I was in Atlantic City for that event. And, you know, so we were supposed to stay in a hotel. I did get a hotel room there, but I was like, you know what? I'm just going to drive back to New York. I didn't really even want to stay over in Atlantic City. So I actually was only there for, I don't know, 12 hours, probably, maybe a little less. And I drove back, and I got back to New York at right around 3 o'clock in the morning. But it was good. I mean, I'm not a huge fan of Atlantic City, but it was very good business meeting. Got to meet a lot of people, got to get in front of a lot of people, for sure. BA says maybe they should stop printing money. Well, I think they are, right? We got some clarity on that, especially in relation to the Fed balance sheet. So the number one talk of the town, well, at least on this stream, is that Federal Reserve balance sheet, which is close to $9 trillion now. So the Fed balance sheet is mainly made up of mortgage-backed securities, or MBS, and U.S. Treasuries. And starting June 1st, we did get some clarity that a lot of this stuff will be rolling off that balance sheet to the tune of billions of dollars. So we'll go into a little bit more detail tonight on the stream, but check this out. I'm not sure if they meant to do this or if it's somebody playing a prank, but check this out. It looks like, I don't know, it looks like almost 2 feet of snow is here, but I think it's dish soap or something. Hey, Lena Sandoval says happy birthday. Thank you, Lena Sandoval. Appreciate it. RJ says happy belated. Thank you so much. Don Smith says go to New Jersey. Maybe someday. We definitely will. Matt Bob says there's 2.2 trillion in circulation. That's crazy. Yeah, and so the weird thing about that is the money velocity. So one of the biggest things to look for is money velocity, which is the rate at which cash will cycle through an economy. It's actually at all-time lows. So liquidity, there's a lot of liquidity, but one of the interesting things, if we look at the overnight repos, that's at all-time record highs. And essentially that is for like investors, hedge funds, and things like that to try to earn a little bit of interest overnight. They'll lend the money to the Fed, and that's in the trillions of dollars. So there's money is awash in the system, but we just really don't know what to do with it. And I think that's why it's causing a lot of this inflationary pressure. So money is definitely awash here, but hey, Chris Beeman, thank you so much. You are so kind. You are too kind, Chris, for the $20 donation. Much appreciated. Much appreciated, Chris. But Chris, you have my email. I think we've emailed back and forth before. Whenever you're finished, shoot me an email. I know we were talking a little bit today, but we'll figure it out. Hey Tris, this is Tom. Did you see the light show last night at the Empire State Building for the Stranger Things promotion? You know, I didn't. I was so bummed out I didn't get to see it. You know, I was so tired after I came back from New Jersey. I think I went to sleep at the earliest time I've ever gone to sleep in like the past couple of years. I went to sleep at like 9 o'clock or 9:30. That's why we didn't have a stream last night. I literally got home, and the moment I put my head down on the pillow, I fell asleep. So unfortunately, we weren't able to stream that, but I think there was some other people that were able to do that as well that I took a look at today. So that is very encouraging. But yeah, for the Stranger Things promotion, they had a big light show on the Empire State Building, which looked fantastic. You know, and they also do that, I believe, once a year for PETA, I believe, which is the animal rights activists. If I'm not mistaken, they always put amazing photos of animals and things like that on the Empire State Building. I think we saw that last year, if I'm not mistaken. So hopefully we'll get to see that again this summer. Michael McDonald says, is this live? Indeed it is, my friend. Yeah, Ruby says, good for you, Tom. We all need rest. You know, Ruby, I think the thing for me is I'm just not used to driving. I don't even remember the last time I drove a very, very long distance by myself. And yeah, for me, it's definitely tiring. Diego is here. Welcome, Diego. British Gray says, hey, Tom, Elon Musk company has stopped making Tesla. That if you want to purchase a new Tesla, you must wait years from now. Well, I think there's definitely ample supply chain issues, but I didn't hear they're going to stop making Teslas. Michael says, hey, Tom, so cool watching from England. Well, welcome. Thank you for being here. Joe says, the strange thing about that is I didn't know about it. Yeah, it was, there was a lot of people standing at the same location that we always stand at, which is right there at 23rd Street. But everybody, this is 220 Central Park South, one of the newer additions to Billionaires Row here at Central Park South. Pete says, anyone here old enough to remember Wolfman Jack? I am not. Well, I'll tell you how old I am, and then you let me know if I'm old enough. I'm 27. Jay says, hey, everybody watching from Ontario, Canada. I love that. Good to see you, Don Smith. Welcome. Daryl says, good evening, Tom. Good to see you, Daryl.
Valerie Harper did.
So it seems as if we are going to get 2 more rate hikes to the tune of 50 basis points. Now, usually a normal rate hike is in 25 basis point increments. But since inflation is really, really ramping here, the Fed wants to get super, super aggressive and raise rates in increments of 50 basis points, which is fine. But, you know, I was talking to one of my good friends today that is in the hedge fund business, and he actually believes the Fed is overcooling this economy, and they could be making a critical policy error here, which is also possible. Hold on, let's just cross the street here. So we're on 5th Avenue and 59th Street. But again, a lot of people think that the market bottomed this week, but you have to keep in mind the bigger macro picture here. The Fed is still going to be extremely, extremely aggressive with their quantitative tightening. And we were extremely extended to the downside. If you pull up the major moving averages on the broader based indices, like the Nasdaq, the S&P 500, we were about 15% extended to the downside from the 50-day, which usually tends to trigger some sort of a mean reversion trade, especially as speculators in the market have to cover their short positions in order to exit their trades. So a lot of times this can create very ferocious short covering rallies. So I don't think we're just out of the woods just yet. I think that the major market indices need to break above and hold above their major moving averages. Also, there's not really many leading stocks showing relative strength. There's a few select companies in emerging markets showing a lot of relative strength, breaking out to new all-time highs, but those tend to be companies in India and things like that. But in the US markets, I mean, if you want to look at relative strength, you're going to have to go towards like the oil and gas stocks, which are very cyclical in their nature. You know, usually the sign of a very, very prosperous and good economy is when all the growth stocks are rocking and in gear. But as we know, as interest rates have been going up, a lot of those more speculative, very high beta companies have been getting crushed because, well, they either have no earnings or their earnings are projected or forecasted very far into the future. And as interest rates go up, those future earnings are now worth less. And in this week's Behind the Street newsletter, I'm going to put some more information, some free information to really help everybody and maybe just reinforce the concept of understanding how rates impact the prices of assets, whether that they be equities, whether that be real estate. I think it's so important. And that's why many of the best money managers on Wall Street will oftentimes say, if you want to know where the stock market is going to go, you really have to pay attention to the bond market, right? The debt market really tells all. The health of the debt market really tells all. And one of the interesting things that I really like that Bill Ackman tends to say all the time, he's like, in simple terms, if you want to evaluate companies, it's predicated on the value of their future cash flows, right? So I think I'm going to put some very useful tools and links in this week's Behind the Street newsletter, so that you guys can really understand the correlation here between the price of money, essentially, and assets that produce cash, and those, I guess you can't really call them assets, or those entities that do not produce cash, right? They have negative cash flows. So stay on the lookout for that. But everybody, we are outside of Trump Tower. NMB 045 says you are using Substack this time for the newsletter. So NMB 045, I have a crazy story about Substack. For some reason, I'm having a hard time exporting my email list from Review and uploading it to Substack. When I do that, when I import, the list to Substack, it's showing a lot of the emails are invalid, which obviously I know that they're not. So that's something I have to work out of. Bonnie Hudson is here, says, hey Tom and everybody, good evening Bonnie. Always a pleasure. Ruby Falcone says, hey Tom, looking forward to your newsletter. Thank you, Ruby. Beautiful night here in New York City. You know, it's not for nothing, it actually feels a little bit humid tonight. It almost feels like how it feels in downtown Miami, minus, it's not that hot out tonight. It's like 65 degrees, but we had a massive rainstorm, so it's definitely at least a little bit humid. But this is East 56th Street and 5th Avenue. Hey, El the Original is here. What's up, El? Good to see you. Happy Friday to you. And anybody in the United States, happy Memorial Day to everybody. Happy Memorial Day weekend. Hopefully you guys have some pretty interesting things planned. Jose says, I know you played soccer in college. Who do you think is going to win the Champions League finals, Liverpool versus Real Madrid? So I haven't been following it, Jose, but if I had to guess just based on those two teams, probably Real Madrid. What about you? Who do you think is going to win? It's said ever since the pandemic, sports has totally dropped off my radar, and I should probably start to pay attention, especially now that a lot of my clients at the event in Atlantic City everybody was talking about sports, and like, oh, did you see this and that? I was like, oh, fantastic, oh, absolutely. I just haven't had any time to focus on it. I think it's just one of those things that the pandemic has caused, right? I mean, out of sight, out of mind. It's sort of like sales. If you're a sales guy and you're not constantly prospecting and getting in front of customers, they're going to forget who you are. So when sports wasn't on the TV, it's sort of like out of sight, out of mind, and humans are creatures of habit. We just pivot to the next thing. So I think I got to do a little bit better job of paying attention to sports overall, I think. But here we are outside of the St. Regis Hotel, everybody. Hey, Roland YT is here. Good to see you. Jose says it's going to be a great game. Tune in, everybody, at 3 p.m. tomorrow. Is that Eastern Standard Time? I'll probably tune in on my phone. Through my Verizon phone plan, I think I actually have free ESPN, to be honest. Lupe says, Tom, if any of your clients are horror fans, you got me in your earpiece. All right, I'll keep that in mind. Hey, Fernando, what's up? Fernando says, happy birthday, Walks from Wall Street. Thank you, Fernando. Much appreciated. You're very, very kind. Much appreciated, my friend. Thank you. LB says, Trump Tower now. know where you are at. Yes, sir. Daryl says, Tom, I saw a rainstorm on Walking Commuter stream tonight. Carson says, I got Madrid. Very cool. Wendy England says, the big banks here in Canada are getting really careful about lending out money. Yeah, I think everywhere is. I think you're right. One of my good buddies that I played soccer with in college is actually playing professionally in Italy. So that's cool. Isaac says, come to the meatpacking district. Isaac, good to see you, my friend. Maybe we will walk to the meatpacking district tonight. And I'm wishing you a very happy Friday. Thank you for tuning in tonight. Frank Gonzalez says, Tom, what would be the most luxurious slash expensive hotel in New York? That's actually a good question. Let's explore that for a little bit. I would have to say it's probably, it just left my mind. Probably the Four Seasons or the Mandarin Oriental, potentially. So I know the Mandarin Oriental is this way. You would have to go to 59th Street, Columbus Circle in the newly named Deutsche Bank Tower, formerly the Time Warner Center. I believe that is a 5-star hotel, the Mandarin Oriental. We walk past that often, but actually we walk past that particular hotel more often in Miami. So I know there is a huge presence there in Miami and New York. But then I'd say probably the Four Seasons, maybe? What do you guys think? Wow, check out this piece, everybody. This is a beautiful piece of one of the greatest, Old Blue Eyes. Wow, look at the detail on this. Fantastic piece here. Vinny Castellano, always a pleasure to see you, my friend. Patricia Ivory says, good evening, everybody, and hi, Tom. Thank you. Hopefully you're having a good one. Hey, Nicole B. Winnings is probably the Waldorf Astoria. Yeah, you know, or the Plaza. I was thinking about Nicole as well. Plaza Hotels, I know, is very expensive. The Plaza is an older hotel. Somebody says Sinatra or Bond. I don't know. It kind of looks like Frank Sinatra. Doesn't it look like him? I don't know. Wow, is it really? I think they painted the blue eyes, so I thought it was Sinatra. It kind of looks like Sinatra, doesn't it? Jay Fox says, hey Tom, that's not Sinatra. That's Sean Connery as James Bond. Really? They look similar, don't they? Let's zoom in. You know, I think you guys are right. As you zoom in, you can see a little bit more detail in the back. Like you could see all the cars and stuff. So I think you're right. They look similar, don't they? Well, I'm not a big movie guy. Deborah says the martini is also. Sean Artis here says, hey, Walks in Wall Street. Good to see you. But in terms of the hotels, I'd probably say the Mandarin Oriental, maybe. Yeah, Cynthia Beale says the eyes make him look like Frank Sinatra. So this is a little bit of a crazy fact about me. I've never seen a James Bond movie. True story. Never ever seen a James Bond movie. You know what's another hotel that's really nice? It's actually close to Lower Manhattan. I'm blanking on the name, but I believe it's right across the street from the World Trade Center. That one right there is also extremely nice. That one's really, really nice. I forget the name. But if you probably search it on Google Maps, it's literally right across the street from One World Trade Center. But aside from this is the one and only St. Thomas Church, one of my favorite churches. Deborah, I think you're right. I think it is the Millennium. This is the one and only St. Thomas Church here. Yes, M Wall on the Run, you are right. I believe it is called the Millennium. Mid-range is the Conrad is also nice. That is true. Lisa's here. Welcome. Cynthia Beale, welcome. LD Original says I've never seen a Bond movie as well. So I've never seen a James Bond movie, or I've also never seen any of the Harry Potter movies ever. But then again, I've never been a movie person. I've never been one to go to a lot of movies. James says the Chelsea Hotel, so much history there. Well, I think it was closed for the pandemic, was it not? Thomas is also the Park Hyatt, New York is very nice. Lupe. Nicole B. Winning says, I've stayed at the Conrad. It is very gorgeous. I think my brother had to stay there for a wedding as well. Wow, NMB 045 says, Tom, I've never seen Star Trek. Well, wasn't Star Trek a TV series back in the day, was it not? All right, everybody, so we were walking down Fifth Avenue. I want to check out Rockefeller Center tonight. But I know it's Memorial Day. Everybody wants to take off. I want to take off too. It's been a wild, wild week. But wild is good. Busy is always good. I'll never complain about being busy because it's way worse to not have anything to do. That means no deals are being done. But starting June 1st, holdings of treasuries on the Fed's balance sheet will decline at $30 billion per month, all the way up to $60 billion per month in December. So they're doing it in tiers. So essentially starting now, or starting June 1st, which is essentially now, I mean only a week, which is crazy to think about. Seems like just yesterday it was winter. The Fed is going to be reducing their nearly $9 trillion balance sheet that ballooned ever since the pandemic started. But if we really think about it, I mean, $30 billion a month is nothing in compared to the multi-trillion dollar balance sheet. And that's just in U.S. Treasuries. Now we have to address mortgage-backed securities. Right, so the Fed also will buy mortgage-backed securities to stimulate the economy. And I believe that is going to shrink or roll off the balance sheet at about $17.5 billion a month, increasing to $35 billion a month in September. But if you look straight ahead, you can actually see a little bit of the Empire State Building. You know, I'm not sure if it's still lit up for the Stranger Things or not. Probably not. But we'll take a look as we get closer to it. Lupe's like, Tom, you should offer your investment expertise to Elon. Well, I mean, he's hired... I think he's in a little bit of a predicament with that deal. Obviously, I think he's going to try to renegotiate the pricing of Twitter. I think he's using the fake accounts as an excuse. And I'm not saying that there's no fake Twitter accounts. There's definitely a massive, massive issue with bots. But I'm not sure it makes up 20%. The argument is 5%. So the numbers we're getting from Twitter is, look, the amount of bot activity, essentially spam, right? We can call it what it is, like fake accounts, is about 5% of the platform. However, some people say it's about 20%. I'm not so sure. But then again, I'm not an expert. So essentially, the argument is, I'm not going to pay a premium if 20% of the users are bots or are fraudulent, right? That means we have to renegotiate the deal to adjust for the real users. But I don't know. Do you guys think that 20% of Twitter users are bots? I think there definitely is, I mean, without a question, bots and sort of scam accounts on every platform, especially during election cycles and things like that, and during major events. And I could even tell here on the channel. I mean, you guys know, usually, got a horse right here. Usually I could tell when there's a major election going on, or there's a major, let's say if it's a war or a conflict across the globe, I actually notice an uptick in bots or spams in the chat on YouTube. So I'm assuming that's probably happens on every social media platform, but I'm not sure to the tune of 20%. Look, I could be wrong, but yeah, James says Twitter is so 2012 anyway. I honestly truly believe, James, that Twitter is the most valuable social media platform. Not in terms of like valuation wise, but in terms of the value you get from being on the platform. And we did a whole stream dedicated to this. Twitter is the best place for networking, especially if you are in finance or in tech. You know, many of the big VCs, many of the big hedge fund managers, investment bankers, tech guys and gals, big private equity people, they're on Twitter and they're chatting back and forth. And you could actually, if you really want to stand out and build a network over a social media platform, I think the barrier to entry to do it, the easiest way is through Twitter. That's my view. I've met people in the investment business through Twitter exclusively, you know, sharing different ideas, sharing equity research. I think it's very hard to do that on a place like Facebook or even LinkedIn, mainly because just the medium of exchange is just set up differently. On Twitter, you know, if you reply to somebody's tweet, they're gonna see it. It's gonna be right there. With Facebook or Instagram, it's not set up in a way for direct one-on-one communication. I sort of think about Twitter as an open source iMessage where anybody could essentially join in the conversation. That's how I view Twitter. I know there can be a lot of toxic nonsense on Twitter, that I do admit, but I think you could say the same thing about any social media platform, right? Hey, Cindy Foley is here. Says, hey Tom, and happy weekend all. Cindy, very good to see you. L the Original says, so true. When I had a small business, Twitter is where I went for marketing and sales back in early 2015. Now I almost have 144,000 followers on there. Yeah, L. You know, L is living proof. I mean, I think the access to people, like if you want to talk to somebody in your industry, to your point, L, I think it's the easiest to do it on Twitter, I think, in my view. But congratulations on your success, by the way. That's fantastic. Love to hear that. Miami Walking and Driving Tours says, Twitter gives you more access and has great content in the sense of what industry leaders are sharing. I agree. I mean, some of the people that you could follow on Twitter in the finance industry, they post really good research for free on Twitter. And the good thing about it is you can comment and make critiques about their research, and people are openly debating the research for everybody to see. It's not like you have to buy a Bloomberg terminal for $2,500 a month. This is completely free, so I think that aspect of it is fantastic. Ibrahim Azam, welcome. Good to see you, my friend, and happy birthday to you. Steven says, Twitter always ghosted my accounts, never noticed any replies until recently. So Steven, I've noticed that as well, and I think they're trying to cut down on spam for some reason. So if they notice a comment on one of your posts that may be spam, they'll hide it, and you actually have to go out and search for it yourself, which is insane. 2020 PPV says 2015 was a long time ago. Twitter is washed now, potentially. FredX, welcome, my friend. L says LinkedIn is also good for networking. A lot of people from Twitter have started to head there. So Elle, when I was very early in my tech sales career, I actually closed or initiated a lot of conversations over LinkedIn Direct Messenger. I think that was before it was quite crowded. Now I get spammed with people trying to pitch me things on LinkedIn. But before, it actually was not fashionable to ask for meetings and things like that on LinkedIn Messenger. This was probably back in 2017, 18, I want to say. And man, that was so easy to connect with people. But now I feel like it's getting a little bit saturated now that you have LinkedIn Navigator, which is actually a true sort of like SaaS-based platform that companies actually pay for. But again, I don't think LinkedIn is dead. I just think it may be a little bit harder to connect in comparison to what it was before. Yeah, Ella's like, yeah, LinkedIn is starting to get crowded. I agree. Peter Webley says Netflix laid off more people in LA, mainly working for their woke programming. Yeah, so Peter, we've been talking about this a lot on the streams. And essentially this is what I was started to write about. I wrote a piece about this in the Behind the Street newsletter, that economic cycles, they work in very, very, very clear ways. Where it's almost weird to watch them unfold. And it always starts in the equity market, right? So you start to have your massive sell-offs in a lot of the, I don't want to say scammy things, but we'll just say like the special purpose acquisition companies, the SPACs, the very high beta growth stocks with no earnings. These things will be getting pounded and they are down 95%. So I remember during the pandemic, everybody would talk about Peloton this, Peloton that. My comment section would be blown up with Peloton. Should I buy Peloton at $300? And I'm like, guys, they don't make any money, and they're they're hemorrhaging cash like crazy. And now the stock is down 99%, and they are laying off thousands of people because companies can survive when the stock price is high because they could just sell more stock to raise cash to hire more people and pay them ridiculous salaries. It's sort of like the old saying. It's all fun and games. It's all funny when you're making money, right? But when the stock price plummets, then you have to start hemorrhaging people and firing people, unfortunately. And I think they actually just came out that, Peloton is actually canceling their plans to make a factory, which is definitely not good. And people are definitely losing their jobs, which is never fun to talk about. So I think that's probably what's happening with Netflix. But even though Netflix generates a pretty sizable amount of free cash, anytime you have an economic contraction, you look to cut the fat in an organization, so to speak. And usually that is, usually who are the first people to go in an organization. Unfortunately tends to be in like HR roles and things like that. Usually if you are in a revenue generating role, or your role within the company helps generate additional revenue that hits the bottom line, you will probably be safe. And that's why if you are a very, very good salesperson, you're a top performer, you will probably always have a job even through the worst financial crisis ever, because the lifeblood of a company is revenue generation. If there's no sales, if there's no people to generate that revenue, well, you have no company. So we've been hearing this across a myriad of companies. They're laying off people, which is never good. And I wrote about this a little bit in the Behind the Street newsletter, saying that you would see all of these articles in the Wall Street Journal and in Barron's saying that the employees have so much leverage over their employer, asking for 20% raises. And I said, you guys should be doing this and jumping on that opportunity right now, because there will come a time when the economic cycle will reverse and the power will no longer be within the employees' hands. And I think that time is just starting. I don't think that gap is totally closed off, but I think it is starting for sure, especially within a lot of the tech companies. There's lucrative, high-paying tech jobs. So I believe almost every single FANG company has announced either a hiring freeze or layoffs altogether. So just another thing to watch out for. Yeah, Ruby Falcone says these look like sliced mushrooms. Indeed they do. James says, I received a card in the mail today about a Pinterest shareholder lawsuit. Yeah, well, there's definitely going to be a ton of litigation with all the SPACs. I mean, we've been talking about this for 6 months. There is going to be so many lawsuits about these SPACs. I know that Pinterest is not, but I'm just saying in general. But that's usually happens in every cycle, right? You'll have a big boom, the prices of equities will go to the stratosphere, and then everything will all fall out, and then you're going to hear a bunch of news stories about, oh, litigation, this, that, sign the petition, and then you'll probably get a settlement for like $13 in the mail. Hey, Melee is here. Good to see you, Melee. Always a pleasure to see you. Lisa says, I agree. My healthcare company went through a merger. I was the revenue cycle manager. I was safe. Yeah. So anything, there's an old saying. I don't remember exactly how it goes, but I'll try to paraphrase it. And I'll do it while I show you guys these very unique type chairs here at Rockefeller Center. I don't know how it goes, but I think it's just like the closer you are to the revenue, the safer you are, the further away from the axe, or something like that. Because essentially, if you're a talented salesperson and you could generate revenue for the company, you're needed. But a lot of the times what happens in cycles of excess or froth or irrational exuberance is companies will take on too much of a headcount than they actually need. And I don't really want to be too harsh on this, but I want to share everybody a video with a very, very famous investor who was one of the main corporate raiders back in the day. And his name is Carl Icahn. And there's a really unbelievable interview that was funny, yet it was a little bit, I guess you can't really laugh at the situation because he fired like floors full of people. So Carl Icahn essentially said he went into this company, he bought a majority of the stake, and he was walking around 5 floors of people in Manhattan, and he could not figure out what any of these people do. So if you type in on YouTube, I think this is like a prerequisite for people to watch. Go on YouTube, feel free to click away from this video, and type in Carl Icahn fires floors full of people. And it sort of explains in detail about what happens during times of economic excess. Companies tend to create jobs that are really not needed. And then once the liquidity crunch happens, that's when people start getting whacked or knocked off. Carson has recently watched that. Nobody could tell him what those people did. Yeah. And not for nothing. At my previous company, I had so many people, one of which the lady sat next to me. Nicest lady, so kind. I still know her to this day, but like she didn't do anything. Literally did nothing. But the LT Prod says, do you believe analysts say that the market is near a bottom? I don't know. I really don't know. I think that I think we're closer to a bottom than not. But here's what I'm looking for. I think it's important. I just want to show you guys a better view of the American flag. I think it's important to have price action within the major indices close and hold above their 50-day and 200-day moving averages. Everybody is getting extremely, extremely excited about this rally, which I get. But if we look back at historical bear markets, usually the most ferocious rallies happen during bear markets for multiple reasons. And we're still seeing a lot of the relative strength in the market in very specific sectors that are cyclical in nature, like oil and gas, energy, staples. So I think all eyes are on the Fed, which is the topic of conversation for tonight. Obviously, they are going to raise interest rates probably 2 or 3 more times in increments of 50 basis points. with the potential of stopping those interest rate increases in September, maybe. I think Fed Chair Bostic gave a little bit of insight into that on Wednesday that said, look, if we have concrete data that is showing that inflation is cooling in the United States, there is a possibility where we'll walk back the rate hike in September. But as of now, we have to live with the 50 basis point rate hikes going forward, probably at every single FOMC meeting. John says Carl Icahn should be working for Tom. Oh my God. So Carl Icahn also has a very interesting Twitter bio. I think out of everybody's Twitter bio, I think Carl Icahn's is the best. Miami says, like bull markets, they just get rough pullbacks in the reverse. Yeah. Well, I mean, not for nothing. I was joking around about this on Twitter. The second to last Monday of every month is when my automatic retirement buys kick in. And I'll give you guys one more shot of the beautiful 30 Rock here. So it turned out to be a nice buy. I know it's just short-term thinking, but the second to last Monday of every month is when my just automatic buys go in into an S&P 500 index fund of my retirement accounts. Hey, M. Singh says, Tom, your views on... I don't have any views on that, to be totally honest. MF Craig says, Carl Icahn, I fired 12 floors of people. Yeah, that's a great video, very iconic video. Miami walking and driving tours is like until they have to take rates back down. Somebody says, Tom, what is your religion? I'll give you a hint. I'll give you a hint. Carson says, we are now just starting to see the results of the previous rate hike. I think you're right. One of the things I'll also say is the market is doing more of the Federal Reserve's work for it. So, and I think, markets tend to overcorrect to the upside and they tend to overcorrect to the downside. So even, at its lowest point in this market sell-off, the S&P 500 was down 20%. So we were in a technical bear market for like 3 hours. The Nasdaq, yes, we were in a bear market. But if you look, as I like to say, under the hood of the market, we are in a severe bear market in tech and in growth stocks. I mean, some of these things are down 90%. And some of these people, especially a lot of the retail traders that were caught up in a lot of the GameStop and the AMC type nonsense, these people are totally blown out. And if you've been watching the streams for a long time, I've been saying to everybody, I'm like, a lot of this stuff is nonsense. Just don't even pay attention to it. Don't get involved in it, because when the market turns and when you're in a raging bear market, the moment the market turns, the first stocks to go are the junk. It's all the garbage. It's the SPACs, the special purpose acquisition companies that Chamath and Jim Cramer were pumping on CNBC every day. I mean, I remember every day turning on CNBC talking about this SPAC. Oh, this company is going to go to space and it's going to revolutionize the world and all this nonsense. And when you look at the financial reports or the earnings of these companies, some of them don't even have any revenue. Anyway, I'll digress. So I think the biggest... Oh, I didn't know there was a WeWork in this building. Let me see. So I actually have just been working out of the WeWork at 430 Park, but supposedly there's one here. I'll have to check this one out soon. Lupe says, Tom, we are here for your confessions. Funny. But yeah, just note that when you could trade these unprofitable companies, but just know that when the market turns, these are the first ones that get dumped, and those usually, go down 80, 90, sometimes 100%. And I think there's going to be a lot of heavy litigation with all of these SPAC, special purpose acquisition companies, because in my view, and again, allegedly, there's a beautiful restaurant in here. Wow, this is a beautiful restaurant. And I like the outdoor dining setup too. Yeah, Carson says Rivian IPOing for $100 billion was a big one for me. Yeah, think about all the, I really want to be choice in my words here, but think about all the people who bought this junk. Anyway, and it was very funny. We did an entire stream about this not too long ago, about how Goldman Sachs and many of the other investment banks are now pulling out of the SPAC business because the SEC is potentially, now that they've gotten so many complaints about the potential of falsified revenue projections, the falsified earnings projections of a lot of these SPACs, that investors have the possibility to hold these investment banks accountable in terms of litigation. So Goldman Sachs is like, hey, we don't want that. We just want to sell all this garbage to our customers. We don't want to get sued by our customers. We'll just sell all this junk. We know we're selling junk. And again, allegedly. It reminds me so much in the 2008 financial crisis. Have you guys ever watched the Goldman Sachs bankers in front of Congress? And I think it was the senators or one of the congressmen or whoever it was. He was like, yeah, we're going to sell that, I can't swear on the stream, but the S-word deal. He's like, yeah, we're going to offload this SHI, you could fill in the blank, itty deal to our customers. And the guy's like, how much of that deal did you offload to your customers? And it sort of reminds me of what's going on with these SPACs. I think the problem is you're not a fiduciary. They don't have any fiduciary responsibility for their clients. I could never, with a straight face, tell somebody, buy. I'll digress. But everybody, this is one of my favorite pieces of all time here. Alec Monopoly. The reason why I like it so much is because if you look closely, there's actual very old stock certificates here. Yeah, Peter Webley. I think you're right. So everybody, speaking, we were talking about a little bit before on the stream. Somebody asked very nice hotels. I believe this is a hotel, and this is an extremely nice one as well. I think this is a very, very upscale hotel. It may even be a 5-star hotel. Hey, Melissa 2087 says, we just tuned in. What street are you on? We are on Madison Avenue, and I think this is 49th Street because we are right behind St. Patrick's Cathedral and the Eden Fine Art Gallery right here. Lisa's here. Christians is the boy on top, looks like you, that's why. Oh, Richie Rich? Funny. Hey, Namaste is here. Good to see you. Kapoor says, yes, I agree with you on the garbage selling point. Yeah, Gregory says 432 Park Avenue is in the clouds. Gregory, I couldn't imagine living in that building and having it be a cloudy day. And you just see clouds at your window. That must be like insane. Hey, Drake Smith says, evening, we'll be in the city soon. What is your favorite restaurant of yours in Chinatown? Ooh, in Chinatown. So I do have a restaurant in mind that I want to recommend to you. However, I forget the name and I forget the street it is on. But if I went to Chinatown, I could show you in a second. But we were talking about it on another stream, so maybe somebody in the chat remembers which restaurant it was, but it was some of the best soup dumplings I've ever had in my entire life was in that restaurant. You know, if you want a really, really good spot, I'm actually going to walk you past a very good Chinese restaurant right now because we're very close to it, and that'll give me an excuse to go to my favorite building, the Seagram building. And I've always gone to this Chinese restaurant because they have some of my favorite soup of all time. And I believe it is a Chinese soup. One of my Taiwanese friends first introduced me to this soup when I would, so after work, we were both salespeople, we were like a team, we would stop for lunch in Flushing, Queens and eat the malatang soup, which is very spicy, Chinese soup, extremely spicy, and they sell it at this place here. So I'm gonna take you past it. So if you're ever in Midtown, definitely recommend it, 2 thumbs up. But here is the New York Palace. Hey, Andy is here. Welcome, my friend. Good to see you. Andy is joining us from South Korea. Always a pleasure. Ibrahim is here. Good to see you, Ibrahim. You know, NMB 045, it could have been a 4, 5, 6 restaurant. Cooking says, wasn't it a Korean restaurant? No, it was not a Korean restaurant. So I do recommend a Korean restaurant in Koreatown called Take 31. So that is my favorite Korean restaurant in Koreatown called Take 31. If you want to get Korean barbecue, it would be at Baekjeong, which is another phenomenal place. But since we're near the Seagram building anyway, we might as well take a walk over there. James is Take 31, I'll have to remember that. Yeah, so if you go, I would Google it, take a look at some of the pictures. The food is very, very unique. It's not like traditional Korean food. It's sort of like, it has an interesting twist to it. So check it out. And it's only open for a very, very short period of time too. So I would definitely suggest making a reservation for that particular restaurant as well. All right, team, we are East 50th Street and Park Avenue. And we are overlooking the MetLife building, Grand Central Station, but right now we are going to turn and walk uptown by the Seagram building, which is right here, which is one of my favorite buildings in the city. So I've actually been working out of this WeWork building at 430 Park Avenue, which is probably now one of my favorite offices in the city. Extremely nice place. Somebody says it's pretty obvious this is a dead economy just by looking how many people are on the street on a Friday night. So I do see your point there. Here's where that logic is just a teeny bit flawed. I think it's important to understand which part of the city we're in. So a lot of people who are not familiar with New York City, you know, a lot of the times when we stream, some people may stream from 42nd Street Times Square, where a lot of tourists are, and you may say, oh my God, look at how many people there are, it's insane, the economy's booming. If you go to Park Avenue, this is Wall Street, right? This is the Wall Street, the financial capital of the world. It's Friday on Memorial Day weekend. All the big hedge fund guys that work in all these buildings, all the big VC, the private equity, venture capital, they're in the Hamptons partying. They're not on Park Avenue working today. So this isn't traditionally where a lot of people are foot traffic. I can tell you with certainty that I was working from the office here this week, and this was the first time since pre-COVID, I would say the foot traffic on Park Avenue is back to 100% normal. But usually after 8 p.m., Park Avenue is dead, especially in the 50s, because you have Blackstone right here, you have JP Morgan Chase, many of the investment banks, a lot of hedge funds are here, and especially on Memorial Day weekend. BlackRock is right here. We may have to talk about them in a minute. But a lot of the managing directors, a lot of the analysts, associates, VPs, they're in the Hamptons right now. They're definitely not on Park Avenue. But here we have it, everybody. This is my favorite building in the entire city right here, by far. This is the Seagram building. I think it is such an iconic building in New York. Yeah, Trace Roberts is that, or Florida. Yeah, a lot of them go to Fort Lauderdale. Some of my friends are in Fort Lauderdale for the weekend. But this is the Seagram building, my favorite building in the city. Honestly, my favorite building in the United States, by the way, right here. Captain Super is here. Welcome, Captain Super. Lori E is here. Captain Super says hedge fund guys don't work remotely. So many of them do, but again, like I said, today was the first time since the pandemic started that I can conclusively say that the foot traffic in the city in Midtown during the workday was back to normal. You guys know I used to work in Midtown Manhattan, close to Bank of America Tower, in the Marsh McLennan building, where obviously huge finance building. We had D.E. Shaw, which is one of the most successful quantitative based hedge funds in the world, in our building. We had one of the biggest telecom companies in the entire world in our building. So this building here, I'm not too sure what it's called, but this is a brand new addition to Park Avenue. And check out the very, very top. If you look at it, it's actually an American flag, but I don't think you guys can see it through the stream, unfortunately. I'll try to zoom in on it, but the very top is an American flag. Let me know if you guys could see it in the chat. I know sometimes the LED lights don't come out too much. A lot of people are saying, hey Tom, why is it your favorite building in the city? So I'll tell you right now, we're gonna walk over it. We're gonna walk over to the building. So one of the things you'll notice about the Seagram building, besides the fact that it's just an unbelievable architectural prize, is that the building is actually built extremely far away from the street. So I'll try to give you some perception here. If you notice, this building built right on top of the street. The sidewalk is very, very slim. However, the Seagram building is really the only one where you almost have an outdoor park, essentially, at the building. So when all these cars stop ripping by 90 miles an hour, we'll take a walk over and I'll show you guys what I mean. So back in the day, before COVID, I would always take my lunch breaks right here. I would get lunch, sit down, read the paper. There's two beautiful fountains right here. And the view of the city from this little patio is beautiful. I'm going to show you guys. And I think that's what makes the building so unique. It almost doesn't feel like you're in the city at times, because as we walk over there, you'll see how loud the fountains are. It almost drowns out the noise of the city. It's kind of cool. Hey Juan, welcome Juan. Good to see you. Brian Forrest, welcome Brian. Yes, that's true. Somebody says, how much property tax revenue New York will be losing in the upcoming years when there is no one to collect from? I'm not so sure. I do understand your point that a lot of people fled the city from the pandemic. One of them technically including myself, right? My primary residence now is in Miami-Dade County. But to your point, if we actually look at the data, I think New York once again, has taken its #1 spot for the most billionaires. The city that has the most billionaires is New York City. We have taken that spot from Shanghai. I believe last year or 2 years ago, Shanghai was #1. Obvious reasons, there's a lot of people fleeing China because of their zero COVID policy. That's a scam, which we won't talk about because we will get demonetized and shadow banned. But New York City is once again taking the #1 spot of the most billionaires living in the city. And I think the richest resident is Michael Bloomberg. And obviously Bloomberg is known for his company Bloomberg. And he was actually the mayor of this city not too long ago. So if you notice, you can't really hear the sounds of the city because you have these two beautiful fountains right here. And the address is 375 Park Avenue. So look at the view from here, and you can just really tell how far away the building is built from the street. It's one of my favorite buildings in the entire United States. And you have a beautiful view of 432 Park Avenue that is literally in the clouds. Robert says, hey Tom, is there a reason you come back to New York City so often? Yeah, the majority of my clients are here in New York metro area. So the vast majority of my client base is in New York and New Jersey. So oftentimes I will have to go back and forth. But one of the things that we're seeing, because you guys know a very large portion of my client base is in healthcare, more specifically in home care, assisted living facilities and such like that. You know, there's been so much M&A activity in the space ever since the pandemic that a lot of the less well-capitalized agencies are now being acquired by the really, really big ones, many of which are publicly traded. So during that acquisition process, a lot of these more well-capitalized companies are building different satellite offices, predominantly in Miami-Dade County, all the way up to like Tampa, Florida, which is on the West Coast. Which I think makes sense, right? Florida is a big retirement state, so you're going to have high demand for home health care. So as my clients are opening up new offices, are doing a lot of M&A, I have to help with that. Hence why I've been back and forth so much. But I'm very thankful for that. I mean, my two favorite places in the world is #1, New York City, and #2, Miami, Florida. I don't think you can get better. I think that those two places are the best places in the entire world. Obviously, I'm biased because I'm from New York, but that's just me. But check this out, everybody. So this is actually One Vanderbilt, but it's so cloudy tonight. The very top of One Vanderbilt is totally covered by clouds. Biggie says, have you been to Tokyo? If so, how does it compare? You know, that's a good question. I have not been to Tokyo, but I would really, really like to go to Tokyo. I think Tokyo and Seoul are my two cities within Asia that I want to go to the most, I would say. So this used to be my spot right there. I would sit here, read the paper on my lunch break. NMB 045 says, Tom, are we supposed to wait and see the Fed's balance sheet to see if they follow their promise? Yeah, well, we could actually see that in real time, NMB 045. If you go to the Federal Reserve's website and you actually click on their balance sheet, you could see it in real time. But that is going to start June 1st. So obviously we heard from the Federal Reserve this week, they're going to raise interest rates 50 basis points. However, Federal Reserve Bostic did come out and say there is a very, very small possibility that should we have more conclusive data showing that inflation in the United States is cooling, there is the possibility that come September, we could ease up on the rate hikes. But until then, you will see interest rate hikes in increments of 50 basis points, which really means that the Fed is trying to gain at least some of their credibility back. Not that they have any right now. So it's all damage control. But I believe the Fed's balance sheet right now is right at about $8.9 trillion. And they are planning to shrink that come June 1st, when they are no longer going to be purchasing U.S. treasuries as well as mortgage-backed securities. Juan says Tel Aviv is expensive too. You know, a lot of my clients are from Tel Aviv, especially, you know, there's a big tech hub in Tel Aviv, especially when it relates to healthcare. So a lot of the new and emerging EVV softwares and EMR softwares, as well as a lot of the remote patient monitoring, RPM solutions, a lot of those companies are based out of Tel Aviv, or a lot of their funding is coming there. So I'm very, very familiar. Not Sukashi says, hey Tom, I worked in JP Morgan and the Fed rules the West world. I would have to agree. Good to see you, my friend. And happy Memorial Day weekend to you. So here's the Seagram building. But now I'm going to take you guys to one of my favorite Chinese restaurants. Hey, Yogi is here. Says, good evening, Tom and everybody. Welcome, my friend. John Smith 2046 says, walks to Wall Street. Hello from Northeast Ohio. Love that. Good to see you, John. Hey, Disney cast members. Says, hey, Tom. The Seagram's building is coaster worthy. I still have, you know, I have that on my coffee table, Disney cast member. Thank you for that. You know, before the pandemic, there actually used to be a company in this building called Serve Corp. I'm not sure if anybody's heard of it, but it was actually a competitor to WeWorks. And they were right here. I believe they were on the 14th floor of the Seagram building. And I was actually looking to rent an office space there out of the Serve Corp. But I think they went out of business, or they went under something. I think there's only one location of Serve Corp in New York City, and I believe that is in the World Trade Center. I think it's in One World Trade Center. And you guys could fact check me on that. If you Google Serve Corp, SERVCORP, you'll see what I'm talking about. John Smith says, yes, I love your Manhattan walks. I came over from an Action Kids channel a few minutes ago. Yeah, so AK. I've been actually meeting up with AK a lot lately, being that we both now reside in Miami-Dade. So AK is a very smart guy, very good guy. Lori E says, I love St. Louis. I have to go. I have to definitely go. This is 399 Park Avenue, and this is one of my favorite lobbies in the city. So check out how beautiful the lobby is in this building. So clean, isn't it? Check that out. Ron Bose says, I'm always curious as to why the lights are left in the empty offices. So I think those tend to be the hallways, right? I'll give you one more view of 432 Park Avenue. Enzo drops as that's money. So this is the building that I work out of sometimes. Maybe one of these days I'll show you guys what it looks like, but it's one of my favorites of the WeWorks. Robert says, hey Tom, have you been to California? I definitely want to go. Before the pandemic, I had a ton of travel plans, but they were squashed, unfortunately. Hey, Iris is here, welcome. Yeah, so speaking about corporate buybacks, I think now stock buybacks or share repurchase programs have reached a brand new all-time record high. So I think we actually did an entire stream about share buybacks one time. And here's why I think, personally, share buybacks have become more fashionable as of late. Here's one reason, I think. I think it's a more tax-efficient way to return value to shareholders. So here's what I mean by that, and I'll explain my piece, and then we could go back and forth in the chat. One of the things that investors look for is EPS, or earnings per share. And you want to have a company that is increasing their earnings per share, or EPS, quarter over quarter, year over year, right? You want to look for companies that are able to sustainably increase not only their revenues, but also increase their EPS, or earnings per share. So what a share buyback program does, let's say if a company says, okay, we have $1 billion in cash laying around on the balance sheet, we are going to take $1 billion, right? And these are just arbitrary numbers, by the way. We're going to take $1 billion and use that $1 billion to just buy our own stock, right? Maybe the management team comes on the earnings call and says, hey, we think our stock price is undervalued. So we think we could get a good return on our investment if we take some of the cash that is on our balance sheet and buy our own stock. Okay, so what does that do? Well, that reduces the overall float of the shares on the market, right? So as you reduce or you take shares of that company's stock off the market, it then in turn increases their earnings per share. You understand? So I think that's one of the reasons why stock buyback programs have been becoming more popular, especially over the last decade. The number two reason is for tax efficiency. So let's say if you're going to return value to shareholders in the form of dividends, well, dividends are taxable events, right? You have to pay taxes on dividends as ordinary income, unless it is in a retirement account or something like that, a Roth or something. You definitely don't have to pay taxes on it, depending on how you have your tax structure set up. But really quick time out, everybody. We're taking a quick time out. Big news, huge news. This is one of my favorite places in the entire city. It is called Little Steam Bun Ramen. I just found out the name today. Usually I just walk into this place, but this place is extremely good. Highly recommend it. The exact address is 146 East 55th Street. And this place is fantastic. If you come to New York City, I can guarantee you, you are not going to be disappointed if you come here. I come here all the time after work. Very affordable, very reasonably priced as well. I would recommend their soup dumplings as well as their malatang. Hopefully I'm pronouncing that right. Their soup. But this place is fantastic. I wanted to show everybody because I think we had a comment in the chat if I recommended any place, and I would definitely recommend this one. Ron Bo says, hey Tom, what has better food in New York City or Miami? Whew, Ron, you're gonna get me in trouble. But I'll be honest. You guys know I'm always honest. I think I'm gonna say New York, but then again, I haven't tried many places in Miami. There's some fantastic food in Miami, by the way, guys. But I think just New York has more diversity in its food, if that makes sense. You know, I could go to Koreatown, I could eat some of the best Indian food, I could eat Middle Eastern food, halal, anything in New York. I think Miami is slowly getting to be that way. You know, there is a big Asian community that is coming about or building a lot of restaurants in a place called North Miami Beach. So I have gone to some of the newer Korean restaurants, which are really good. But I think you have an overall more diverse choice in New York City, if that makes sense. So hopefully that answers your question. But it's 55th Street and Lexington Avenue. Hey, Gothamist says, Tom, the Crab House is good across the street. You know, I've never been, but it's always packed. So I'm going to have to go there. Maybe I'll actually go this weekend. Maybe I'll go this weekend. Let me turn down the brightness on my phone so the battery can last a little bit longer. Hey, Dan is here. Says, hey, Tom, good to see you, Dan. Much appreciated. Thank you for being here. Hey, Lady O, what's up? Welcome, Lady O. Good to see you. Somebody says, show your face. You know, I accidentally showed my face at the beginning of the stream. Disney cast member says, walks from Wall Street. You won't find that diversity anywhere but New York City. Yeah, so one of my friends says you may find that diversity in Paris, but I'm not sure if that's true. Deborah says, I think that Central Synagogue maybe. You know, one of my favorite synagogues in the city is called Sutton Place Synagogue. I'm not sure if anybody has been there. It has a beautiful waterfall type public park outside. So Sutton Place Synagogue is really, really nice. I don't think we'll have time to walk past it on tonight's stream, but we will walk past it. It's one of my favorite spots in the city. Very quiet place amongst all the craziness in the city, I think. Hey, Mark Francis 076, thank you so much for the $5 donation. You are too kind. I very much appreciate you. Thank you so much. Yeah, Roberts is Tom. Toronto also has tons of diversity as well. Yeah, we got to get up to Toronto. You know, I also want to go to Montreal as well. Got to get my passport. Somebody says, tell something about Philadelphia. How's that place? I've only been to Philly a couple times, and the only times that I've actually been to Philly, I've been there for like 24 hours. And I've just gone to work, business meetings, and back to the hotel. So the last time I was in Philly, I went to this place called King of Prussia. I'm not sure if anybody's familiar with that. Which I guess technically is not Philly. It's like a suburb of Philadelphia, but it was all right. I thought it was all right. Cooking says Montreal is a very walkable city. And I think everybody speaks French. Hey, Doga Video says hello, good to see you. Welcome. Hey, Deborah, thank you so much for the $15 donation. You were extremely kind, and I appreciate you. And I'm wishing you a very, very, very happy Memorial Day weekend. So thank you so much for that. Much appreciated. Wow, everybody, check out 432 Park in the clouds. Insane. Really crazy. So I'll touch on that a little bit. If you look at the tech-heavy Nasdaq, one of the questions was, why is the Nasdaq down more than the S&P 500? Well, the S&P 500 I like to consider the broad stock market, right? So the Nasdaq is very tech-weighted or very tech-heavy, and the S&P 500, you have, a lot of the oil companies, a lot of the energy companies. So the Nasdaq's down 30%. While the S&P 500, even though it's not performing well on a relative basis, it's gone down less than the Nasdaq because you have a higher weighting to oil and gas industry, construction, manufacturing, when essentially the Nasdaq is just all high beta growth, right? And in times of interest rates, when interest rates rise, the value of those future earnings are now worth less in present terms. And I'm going to explain this in a little bit more detail in the Behind the Street newsletter. I think it's so critical for investors to really understand the bond market and how interest rates affect equity prices. Yogi says S&P 500 is for working people, Nasdaq are for the millennials. Oh my God. That's a funny way to put it. Hey, Sebastian is here, welcome. So, I guess to finish off the point, a lot of these oil companies or these oil stocks are actually trading at new 52-week highs when a lot of the tech companies are trading at their 52-week lows. So you have a little bit of off-balancing there, or hedging. So I would say the S&P 500 is probably the most diversified index. The Dow Jones Industrial Average I don't even really look at because the Dow Jones is 30 stocks, it's 30 companies. Hey, Elizabeth, thank you so much for the $5 donation. You are way too kind as well. Really, really appreciate you very, very much. So here's where I go in. So this is one of the WeWorks that I work from. Right here on Park Avenue. And it has a really, really nice view. Maybe one day we'll start a stream from the top of the building. We have a really nice view of this brand new building that's going up. Hey, South Beach Trader, thank you so much for the $50 donation. Wow, you guys are way too kind, but I appreciate each and every one of you. You guys are fantastic. So South Beach Trader, much appreciated, and I hope you have a fantastic, Memorial Day weekend. So thank you so much, South Beach Trader, Elizabeth as well, and Deborah and everybody who's been wishing me a happy birthday. So thank you so much, I appreciate it. Thank you, South Beach Trader. Lori E says, I went back and watched the beginning and saw you. It's funny, for some reason I pictured you as a blonde. Really? Interesting. Yeah, unfortunately, so at the beginning of the stream, everybody, if you want to see what I look like, that's what I look like. For some reason I couldn't get the comments to show up tonight. And instead of showing the chat, I showed my face. Disney cast member says, Tom, are you going to Jones Beach this weekend? I actually may go to Jones Beach. For real this weekend. And if that happens, I'll send you some pictures. I think that's a beagle. Jasmine says, is today your birthday? No, so my birthday was on May 25th, but unfortunately I was not able to stream because I had to sponsor a big work event in Atlantic City, New Jersey. So we couldn't stream on my birthday. But everybody, here's 432 Park Avenue from the bottom, like literally right in front of the building. This is 432. GX72 says, hey Tom, do you live in the city? Not anymore. I used to live in Manhattan, but then I moved to Miami. And now I stay with family on Long Island whenever I'm back in New York. But here we are at 432 Park Avenue. Also, everybody, this week we got some housing data. Existing home sales fell to their slowest pace since the pandemic started. So obviously, one of the major things that is impacting that is higher interest rates. It's for the first time since 2011, we have 30-year fixed rate mortgage rates above 5%, probably going to go a little bit higher. And many people think that this is going to crash the housing market. I don't think so. I think it will eventually put pressure on home prices, but I think if you're a first-time home buyer or you're looking to get in your starter home, I don't think that this should be a cause for concern. If prices drop 20%, well, that just means you could now afford to get in a home at a cheaper price. Now, here's where I disagree with a lot of the media, and you guys let me know what you think. Here's where I disagree. A lot of the times, the mainstream media, even the Wall Street Journal, Barron's, everything. Actually, I want to go around the block. I want to show you guys this art gallery. They'll say homes are now less affordable for people because interest rates are higher. Yes, that is true. But if you know me, I tend to be more conservative. I never factor in if I could afford a home based upon the monthly payment. That is like a recipe for total unmitigated disaster. If you're saying, how much house can I afford based upon how much is the monthly payment? You don't want to do that. You want to work on the, if it's not for investment, if you're going to live in the property, if it's a single family home, duplex, triplex, you should say, can I afford this home based upon my income and how much the actual value of the house is. Many people say, oh, I could afford, a $2,300 mortgage payment because interest rates are so low. I really don't think that's the way you should look at things. So when you read in the paper, affordability for homes are at all-time record lows now because interest rates are going up. Well, I think that is only temporary, and here's what I mean. We've only been experiencing interest rates at 5% for a couple months, guys. It's been a couple months. So I don't think the prices of homes have not yet had time to adjust. So 4 months ago, if you bought a home, a $500,000 property, you probably got, let's say, a 3% interest rate, or even a sub 3% interest rate. But now that same house on the market or your comps or your comparables are still going for that $500,000, but interest rates are now 5%. So yes, your mortgage payment is probably going to be 50% higher, but rates have only been at 5% for a couple months, right? So you need the market to adjust based upon the rates. And since rates have gone to Mars in such a short period of time, I don't believe that valuations of homes have had time to adjust just yet. So I think that's why the data is a little bit wonky right now. I think you're going to see home prices decline. I think that is a good thing. Over the long term, a lot of people, they'll buy a house and they'll flip out and they'll say, oh my God, my house value dropped 10 or 15%. Well, why do you care if it drops 10 or 15% in the short term? You're living in the house. You're cooking dinner in the house. You're living there, right? It's not like you're going to rip out the equity. I think that's just people's psychological mood in the way they look at things. You want to look at it from a long-term perspective. So if home prices decline 15% and you're well capitalized, well, maybe you can go back into the market and look for another deal, right? Especially if you're planning on holding these properties for, let's say, 10 to 20 years. You know, if that's the case, if home prices decline 30% to 50% and you're a 26, 27, even 35-year-old kid, well, what do you care? You can just go and buy more properties at a discount to accumulate more assets, because there's so many tax advantages of owning different types of real estate, especially if you are using these properties for rental income. There's a lot of things you could do. So I think that you shouldn't flip out so long as you personally are well capitalized. It's very, very hard to lose money on a deal if you are very well capitalized and you don't make emotional decisions based upon other people's opinions. The biggest mistake I'm seeing a lot of people make right now in real estate is they're saying, oh, my friend got a house, my other friend got a house, and I'm never gonna get a house, I'm gonna get priced out of the market. And they flip out and they get into these bidding wars and they overpay for property by $100,000 over ask. That's how you lose money. How you don't lose money is by putting it into perspective and saying, okay, I make $50,000 a year. This is what I can afford. And I'm not going to overpay for something. Maybe you make $100,000, maybe you make $500,000 a year, right? Your buying process should not be predicated on what other people are doing. You should focus on your own financial situation, because that's what matters. But obviously, I think especially in the United States, people tend to try to keep up with the Joneses, tend to overextend themselves, and that's how you get looped in to a really, really bad deal. And just remember, there's literally a house on every street corner in America. So if you saw one house you think is your dream home, I can guarantee you there's 10 other houses that are exactly like that you're probably gonna like even more. So never think that you need to FOMO into a deal. There's always gonna be deals, always. So that's my 2 cents on that. Also, same thing with the stock market. So I've noticed a lot of people, and I think this is a good way to gauge investor sentiment in the market, is through my email box. I'll never show my email box to anybody, obviously, for privacy reasons, but based upon where stock prices are, where the prices of equities are, the verbiage from the emails that I receive are so drastically different. 6 months ago, my email box would be flooded. Should I buy this stock? I'm gonna buy this one, I wanna buy that one. And they think that, oh, the price of the market already went up, I don't wanna get left behind. My advice to you would be, the stock market was around 100 years ago. Think about that. The stock market was around 100 years ago. And the stock market is gonna be around for the next 100, 200,000 years, assuming we don't get hit by a meteor or get into a nuclear war. The stock market's gonna open on Monday. Well, okay, maybe not this Monday, it's Memorial Day, but you get the picture. Like, you're not missing anything, okay? There's no need to FOMO into an investment, or you think you need to buy a stock just because the stock is going up. The market's gonna be open forever, okay? I would take the time to understand how to evaluate businesses and then come back to the market, because the market's not going anywhere, right? What is going somewhere is your money, and if you throw your money at an investment you don't understand, you're gonna lose that money. So don't feel like you need to do it now or it's a rush. The same house, like I put it in perspective like this. I bought my property. My property was built in 1950. That house has been sitting on that piece of land since 1950. And it's probably gonna be sitting on that same piece of land in 100 years from now. So you don't need to FOMO into things. It's gonna be right there, okay? Unless like a tornado or something knocks it down. It's there. So don't freak out. Same with the stock market. The S&P 500 is gonna be here in 100 years from now. If you don't understand it, you don't need to buy it. Hey, Robert, good to see you. Yeah, Robert, you're right. But I think you get the point I make. Hey, Charlie Richardson, what is up? Charlie, always a pleasure to see you. I hope you're doing well. Yogi says, are you going to renovate the house, Tom? No, so I actually got lucky. My house needs very, very little work. The only work I need to do, Yogi, is in the backyard. I have to rip up all of the concrete because my backyard is a big liability right now. Let's just put it that way. But it's almost done. The backyard is almost done. Excuse me. Hey, Kupar says, hey, Tom, what is your email address? If you look in the description of this video, I believe my email address will be listed. I believe. But now we are looking over Billionaires Row, everybody, right here. Beautiful view and very nice night out. Hey, Robert White says, hey, Tom, great picks tonight. Thank you so much. Hey, Samantha R is here, says, oh my gosh, I miss walking here. Yeah, it's definitely beautiful here on Billionaires Row. Dollars is here, says hi. Disney cast member, good to see you. NMB045 says, hey Tom, I gotta go, good night. Thank you so much for joining tonight, NMB045. Much appreciated. Carlos says, Tom, if you look for money all your life, you sleep with the enemy. If you walk with God, your enemies. Very nice. Very nice. Sammy Basie, good to see you, my friend. So I think this restaurant here is called Nobu, which is a very, very upscale and famous restaurant. Yeah, James says there's always another train coming. I think that's another good way to look at it. JF says you should also look at the other monthly / annual costs beyond the mortgage payment. Dude, I could not agree more. I could not agree more. Like, people are always like, okay, I can afford the payment, but what they don't understand is, okay, what happens if the AC goes out? What happens if your heating blows out? What happens if you get a leaky faucet? You know, when you're a homeowner, that is your responsibility, right? You know, when people are so conditioned to renting, like I was a renter for all my life. When something goes wrong, you scream and yell at the landlord, and you kind of forget that these things cost money. So I think it's very important to be very, very diligent when you're buying a piece of property, because things can go wrong. The roof is going to leak. There's going to be shingles that are missing. Maybe you need new carpets, new flooring. You know, so I think that's a really good point too. Maybe you need new electrical work, whatever it may be. So yeah, I think you're 100% right on that. Action Kid, yo, I was just thinking about you, man. Action Kid says, or if you need major electrical work done like me. Well, I must say, Action Kids, it's good to see you, Action Kid. Welcome. Action Kid is a very, very beautiful place. Let's just say my jaw was on the floor when I saw his place. Beautiful. JF says the other cost people don't consider is property taxes. Yeah, I mean, JF, that's true. So I actually just paid my property taxes a couple months ago out of my escrow account. And here's the negative thing about that. So I did not qualify for the homestead exemption just yet because I didn't file the paperwork in time. But then again, the property tax is still less than what it would be in New York, obviously. But I mean, still, it's expensive. But everybody, if you're enjoying the live stream tonight and you want to join us for more live streams in the future, feel free to hit the like button on the video and subscribe if you are new. because we'd love to have you here on more conversations just like this. Most nights, I believe we are live 5 days a week, as much as we can, 8:30 Eastern Standard Time between New York City and Miami. Tomorrow, Saturday, I want to try to go live from Lower Manhattan. We have not been on Wall Street for a very, very long time, and I want to get back there. But just as a quick recap for those of you who are just joining, we were talking about the FOMC, the Federal Reserve, on Wednesday. They essentially said that they are going to raise interest rates 50 basis points at every single Fed meeting until maybe September, they said. If they can get some conclusive concrete data that shows that inflation is cooling in the US, Fed Chair Bostic, I don't know what that was. Fed President Bostic said that there is a possibility that they will hold off on raising rates in September. But the most important thing, which we talk about all the time, is that Federal Reserve balance sheet. So if you type !news, NEWS, in the chat, you'll be able to sign up for the Behind the Street newsletter. If you go to issue number 7, I did drop a link to the Federal Reserve's balance sheet, so you could actually look at the balance sheet in real time. So starting June 1st, they will be reducing the size of that balance sheet, in which case that is made up of mortgage-backed securities and US Treasuries. So as we know, ever since the pandemic started, to stimulate the economy, the Fed has been buying mortgage-backed securities and US Treasuries ad nauseum to try to stimulate the economy. That is no more. So I appreciate everybody today joining. I know it's a short stream tonight. Unfortunately, I made my brightness too bright on the phone, so I'm only on 6% battery. But if you guys scan the QR code on your screen, it's going to take you to a link where you could sign up for the Behind the Street newsletter for free. It is a free investing newsletter where we talk about not only the US equity market, but emerging markets, fixed income markets, and real estate. I try to post that every single Tuesday after the market closes. We will be getting back on schedule. So thank you, everybody. Also, thank you, everybody, for donating to the channel for my birthday. Much appreciated. You guys don't have to, by the way. But I do appreciate the kindness and the support. Really quick before the phone dies, I do want to wish everybody a very happy, healthy, and safe Memorial Day weekend. I want to give a thank you to all of our veterans, past and present, all of those who serve in the armed forces. We support you here on the Walks on Wall Street channel. Much appreciated, and everybody be safe in the city wherever you are, and take some time to relax. It's been a crazy week for me, so I know I'm going to probably take maybe tomorrow, Sunday, just to relax around the city, maybe read some stuff, grab a cup of coffee, something like that. So if you're in the city, let me know. So Andy, much appreciated. Sierra C, Disney cast member, have a good one. Lady O, thank you for being such a great moderator. James, thank you so much. FredX, Mike Skate TV, thank you so much, sir. John, always a pleasure to see you. Photos from around New York, thank you so much for the birthday wishes. Samantha R, FredX, British Grey, Golf, Raven, I appreciate you so much. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. And if you rewind to the beginning of the stream, and if you want to see what I look like, I accidentally showed my face, so there's that. Ruby Falcone, thank you, my friend. Kerry, appreciate it. Carson, I gotta run, everybody. Be safe this weekend. And to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere. You just need to know where to look. Have a good one.